Everyone, welcome back to another video. I want to apologize if I look like a little bit like a mess. It's the end of the day already. I want to get this video done for you guys. So in today's video, I'm going to be going over how to master TAs, right? And use TAs towards your advantage. What does a TA look like? What's included in my TA? What do I normally do before every single trade that I take? Same thing's going to apply. You guys are basically going to get an in-depth view of what my process looks like whenever I send a trade signal out if you are in the trade group. If not, then links in the description. You guys could sign up for that. I do have a free one as well if you guys don't want to pay. Of course, the free one's not going to be as in-depth as the VIP one. The VIP one is going to have a lot more stuff that I'll also post on the website for you guys to take a look. Now let's get into the charts and see what I mean by that. So what TA stands for is technical analysis, and the reason I say you want to master this is because essentially it's everything. It's everything and not, right? You need to mix your TA with your fundamental analysis, which is what you're going to be using your forex factory for, as well as other news outlets as well, so you can keep up with the economy. Now the pair that we're going to be looking at today is going to be US 30. The main reason I like you looking at US 30 is because it's an indice and it's what I normally trade, so it's what I'm very comfortable and confident trading in. Now, a great opportunity just happened in US 30 that the whole team caught this morning, as well as yesterday as well, because this was an intraday trade, so we did take it as a little swing. First things first, what I like to do is do a top-down analysis. What a top-down analysis means is you're basically going to be breaking down your analysis from the higher time frame down to the lower time frame. And usually the only reason you go to the really low time frames is to get an exact entry if you're a swing trader or intraday trader. But overall, your entry wouldn't matter a crazy amount, just for the fact that if you are going to be holding this trade for a day or two or 8 to 10 hours, your entry won't be the most important thing. It's basically just making sure that you read price action in the correct way to where the trade's in your favor. So I'll start off on my weekly and see what price has been doing in the past couple weeks, even though I know what price has been doing because I keep up with it and I look at it every single day because it's my job. So here on the weekly, you can tell that price did sell off a little bit in the past couple weeks, but price has been gaining some more buying pressure. So buyers are back in the market. Now, this does not mean that we're going to go straight to the moon. This just means that there is some buying pressure at the moment. So for the past 2-3 weeks, we have been buying again. Now on the daily, what the daily tells me is there's a support level right here. So what I'll do is I'll draw that up. Nice little support level right here on the daily, to where what a support level means is basically it's a psychological level where price action usually won't go below, because a lot of people are holding at this price and price is not comfortable dipping below this price. So now knowing that, usually you just trade off a support or a break and retest. What I'll show you guys exactly what that looks like later. So now I know that price has been pushing up. It broke out of the little range that I was in right here, which you're going to see on the lower time frame. Now price was ranging for a couple days, then it broke out, came, retested, and went back up. Now on the 4-hour, you're especially going to see this. Now we're not even using indicators yet. I will add into two little indicators that I do use just to confirm my bias. Now, first things first, even though I just did a top down from the weekly to the 4-hour, you also want to make sure that the trend is aligned with what you're looking at, right? The trend is your friend. It's very important to not take counter trend trades at first, just because when you're not as an experienced trader, you might take a lot of losses, or you might enter trades at the wrong time at a counter trend before that counter trend is actually correct. So by price breaking out of here, I could identify that, even though it's a counter trend trade because we were selling off, it is the right moment to take a trade and go up for the buy side. The reason I say this is because you can see right here that price created this little consolidation structure where price was just ranging, right? So that's going to be our price structure. And the main reason we're going to go off of this price structure is because it's where price has been the past couple of days. So price got very comfortable here. It established a support area and a resistance area. Now, the reason this buy was so easy and so cookie cutter to take was because it was a clean break and retest. So what I mean by a break of structure is simply this. Let me go to my little tool right here, path. So remember, just a break of structure would be a break out of the normal structure, which is right here. Now, this is what you're going to see. You see a clear break right here. I'm just going to draw it here on the side, just so you guys don't have the candlesticks in the way. So break out of structure, all right, retest, the structure, and the main reason you want to wait for retest is because this is confirmation that the previous resistance level turns into a support level. Now all that means is it's going to give you way more confidence and more confidence to go into this trade with more confirmation that price is going to continue pushing up because it's rejecting the downside. Now, as you can see right here, price did exactly that right here. So now the main reason we do that is for a great entry. Once you see this price, the candlesticks wicking right here, and you see price action moving back up, then you would get in at this point and go to wherever your TP is. My current TP on the trade was 33,900, which we ended up hitting, but we weren't really in yet, but price will most likely get there again anyways. So another little tool that I like to add just to make it more clear for people is using a long position or a short position, depending if you're going for a buy or a sell. Now, long position just means you're going in for a buy. This helps a lot with creating your risk reward ratio. So I already knew that once I broke out of this structure, I'd be looking for buys, as I sent it out in the chat. Now, I always like risking 1% on my trades. Usually, if I'm not very confident in the trade, I'll risk just 0.5% and scale into that position, or even 1/4% and scale into it. Obviously, this is only going to come with time and experience and knowing how to split up your lot sizes and going from there. Now, overall, this trade was a little 1 to 4 or a little 1.38. That's perfectly fine. This shows exactly what price did. Now, we got in. We didn't get it, well, hold up, let me reiterate that, because a lot of people are going to get confused and get in at the wrong time. And I always break this down and I write like a whole little paragraph on when to actually get in and when to know when you should get in. Now, let me move this out of the way. I'll move this to the side for you guys, and I'm just going to show you. I'll have the little arrow tool right here. So you never want to get in initially when it would hit this price target, just because price can continue falling down and you're just catching a falling knife. What you would look for is, this is on the 4-hour, which you can see up here. You want to get in at the next 4-hour open where price is still pushing up and there's rejection. This right here is rejection. This right here is rejection. You'd be getting it on the bounce. Now, once you get in on the bounce, then you have so much leg room to play with, because you'd see once this candle open, if you would have got in once price stayed above here or broke above here, you're going to see that you are in zero drawdown whatsoever. You see, no drawdown whatsoever. So price is still playing out. It's still currently happening, still a live trade that's going on. But nonetheless, I just wanted to show you guys what that actually looks like, because a lot of people make the big mistake and they get in way too early, right? And now this trade perfectly played out, but that is not always the case. Sometimes you do have the opposite happen, right? Price could have easily came, retested, and came back down, and then you would have lost that trade because you weren't waiting for that confirmation to happen. Now, by waiting for that confirmation, you avoid that loss and you get in at almost a perfect entry. I always like to say that a perfect entry doesn't exist, because there is no perfect entry. It's almost impossible to get a perfect entry. You can get a very optimal entry and an entry that's very beneficial, but getting a perfect entry is almost impossible. In this case, we did get the most optimal entry, and that was just because we played the break instruction or retest, which usually works 99% of the time. That's why I like telling everybody that that's the easiest type of trading that you could use. Now, another tool that you could use to add into your conferences is your EMA. I like using the 50 EMA. It's basically an exponential moving average on the past 50 days. And it happened to be that price actually lined up with the EMA as well, right? As you can tell, price came down, touched the EMA or barely got to the EMA. And the EMA basically just acts as a continuous support area or line of support, and you can tell that the moment price touched it, it went up, and that was beautiful. So that was a great little confirmation. Another thing you could use is the RSI. The RSI is a little trickier to use. I'll expand it here so you guys can see more. I do have an EMA on my RSI just to help me with more confirmation. Basically, whenever price is moving sideways, you're going to see right here it does use consolidation, and then once it breaks out, it's more noticeable. Now, the top line on an RSI, and what an RSI stands for, is relative strength index. So that'll just show you how strong the pair is, whether it's oversold or overbought. As you can tell, we haven't reached the overbought level yet, so we still have some more room to go, which is probably where it's going to go to 33,900, and that's most likely where the overbought section is. Now, the reason you not want to use this, but it's a great little tool to have, because you can usually catch a lot of pullbacks with using this indicator. Now, I'm also a strong proponent of not using indicators and just plain price action and learning how to use your support, resistance, trend lines, because it's super vital to your trading strategy. And if you know price action, then nobody can take that away from you. You automatically just know where price should be going in which direction, especially if you do have a lot of time in the market and you have been practicing that currency pair or indice or commodity, and you've been looking at it for a certain period of time. So the way you trade this is you basically ping pong it, right? So the moment price goes overbought, then you go in for a sell. If you go for, or price is oversold, you go in for a buy, and it usually works out, right? Price right here was oversold, then you would have got in for a buy, boom, right here, right? Same thing for oversold. If I move this down a little bit, you're gonna see that price was oversold here, then overbought, then you sell it, come back down. It's a great little indicator you guys can use. And if you guys want a video on my exact settings on my indicators, just leave a comment and I'll do a little breakdown of what's actually in my indicators. Now, that's pretty much it. That's all I do. I like keeping it super, super simple. Not 9 out of 10 times, but about 50% of the time, I don't even use my EMA or my RSI. I just take a look at it every now and then whenever I'm not too confident on a trade. In this trade, I actually didn't even use my EMA or my RSI just because this was a textbook trade to take. This is a clean break and retest structure, and it was a very confident trade that I was able to take, as well as everybody else benefit from in the signals chat. Now, hope you guys enjoyed the video. I may have rambled on a little too fast for you guys, but just slow it down. Or if you guys think I spoke way too fast, just let me know as well, and I'll take care of that. Now, only thing else I could add on to the video is stay consistent and keep trading, keep adding that time, right? Because time in the market is going to beat timing the market every single time. Hey guys, sorry for interrupting your video, but I just wanted to let you guys know, if you guys check the link in the description, I do have a private little link right there for you guys to have direct access to me through Telegram. It's not a bot, it's not some computerized assistant or anything. It's my personal Telegram link to where you can send me messages on any questions you guys have or other topics you guys want to talk about, and I'll be more than happy to respond to you guys. I'll try to respond to as many as you as possible. If I don't respond at the same time, just give me a couple minutes or an hour and I'll get to you accordingly. Now, also in the link in the description, I do have all the free Telegram, the signals chat. I do have the website where I offer all the services, and I also have a direct link to the free forex and stock market coursework as well as crypto coursework.